Rising expectations that former President Donald Trump will regain the White House in November are supercharging the so-called Trump trade on views that his policies will lift corporate profits while spurring worries about the country's long-term fiscal health. Overnight, Wall Street stocks rose and the Dow Jones hit an all-time closing high after U.S. retail sales data supported the view that the Federal Reserve is approaching its easing cycle, reining in inflation while avoiding a recession. Locally, investors will focus on the Reserve Bank's interest rate decision and President Cyril Ramaphosa's opening address to Parliament, both due tomorrow. A Reuters poll predicted that the SAB will leave its repo rate unchanged, but cut rates by 25 basis points to 8% in September as inflation cools. This is earlier than a November move that was expected in a June survey. Nonetheless, the all-share index is down 0.4%, financials down 1.7%, industrials also in negative territory, and resources bucking the trend up 1.9%. The rand is trading at 18.15 to the dollar, 19.86 to the euro, and 23 rand 66 to the pound. To give us more details on the latest market performance, we are joined by Chantal Marx from F&B Wealth and Investment. Chantal, thank you so much for your time. I mean, it's quite interesting to talk about this Trump trade, but at the back of our minds, we're also considering, or rather looking ahead to a possible September rate cut coming out of the U.S. What's your sense of market performance given what we're seeing there coming out of the financials as well as the industrials?
Yes, so I mean, it's been quite interesting over the last few days because we've seen market breadth improving. And by that, we mean that smaller companies in the US have actually been performing well and in line with the mega cap companies. Well, some of the mega caps have lost some steam. And I think that that is a reflection of what is expected under a Trump presidency. So Republican presidencies generally opt for less onerous taxes and less regulation, which would be better for small and mid-sized firms, while the trade issues that could come to the fore, especially around their views on China, could be very negative for companies in the Magnificent Seven.
Let's stay stateside for a bit. I mean, we've just almost done with the banking earnings. What was the key takeaway for you as one common thread, I suppose?
So I saw two common threads. The first one, people are using credit cards and they are struggling to repay that credit card debt. So that does tell us that the US economy is under a little bit of strain, particularly on the consumer side. And then the second thing was that some of these companies with bigger investment banking and wealth management businesses performed quite well because, of course, markets were quite supportive during this specific earnings season.
Okay, so the one thing I found interesting, and let's bring things locally, is the Pick and Pay write-off. I mean, we've been talking about it in terms of how much Pick and Pay is looking to raise, but it was quite interesting now that we've got the rights offer circular. I mean, there were a couple of things that stood out for me, and one was that the cost of the rights offer is going to be 114 million rand, if I'm not mistaken. But it was also quite interesting to see how much they'd spent on diesel in the year to February, and that amount was sitting at 698 million rand, and I try to contrast that with how much they are trying to raise, just so I can get a sense of the impact of load shedding. But when you look at that circular, what stood out for you?
Yes, isn't it absolutely incredible what the impact of load shedding can be, particularly on companies that you don't expect to be as affected? And I mean, just the savings on load shedding alone this year will probably cover those advisory fees that they had to pay to undergo this rights offer. But what stood out to me was just the discount is quite deep. I think that's probably the better thing to do because it does mean that more shareholders will be enticed to add to their Pick and Pay exposure. I also thought that their plans are quite clear. And my thinking around Pick and Pay at the moment is if you can get the balance sheet in better shape through this rights offer, you get some sort of further support through the Boxer IPO, which will also help us value the company better. And you've got some of the macro tailwinds coming through cyclically from lower interest rates and lower inflation, and perhaps some structural support from an improvement in the growth outlook for South Africa generally. they don't have to do that much to the grocery business in order for them to trade out of the scenario that they're in right now. Obviously, that would be quite the bonus, and I do think that they are quite committed to making that happen.
Another piece of news that caught my attention was Sasfin proposing to delist. I mean, they've cited some reasons as to why they are looking to go this particular route. What do you make of the proposal that they're putting forward to the shareholders, and also Sasfin in general as a stock?
So I think it's quite an enticing offer to shareholders. Sasfin has really been through the ringer over the last couple of years, and there were also some really serious allegations of money laundering attached to Sasfin Bank in particular. And I think that they have really struggled from a reputational perspective, both in terms of the consumer-facing businesses as well as the actual stock. So I don't think it's surprising, and I think that investors have been looking for an out, and this perhaps offers that to them. And I think that Sasfin, the business, can be kind of better controlled and better repositioned as a private company. So I absolutely agree with that. I mean, as a stock, I think I would have moved away from the stock once the governance issues started becoming a concern. And I think that there's a lot that needs to happen there in order to properly fix that business. But I think that longer term, they should be fine. I just think that it's trading very close to that offer price right now, so perhaps now is not the time to get involved.
Tomorrow we're expecting the MPC to announce the interest rate decision. Consensus, depending on who you talk to, some are leaning towards the fact that it might be unchanged, some saying that we might get a surprise. Where are you leaning? Is it unchanged? And I suppose as well, given the data that we've gotten out of the SA economy, would the Reserve Bank have had the luxury to move now before the Fed, or would they have to wait?
So I think just in terms of our positioning as a small open economy, we would probably want to follow the Fed rather than try to lead the Fed at this point. I mean, I think that inflation is starting to come down, and we certainly do expect interest rate cuts this year. We just don't expect it right now. From a market's perspective, there's about the futures market puts about a 40% chance on a 25 basis point cut. I think the chances of that are quite lower, but I mean, stranger things have happened. There could be reason to cut because of the weakness of our economic backdrop and the fact that inflation has been steadily coming down. That's just not our base case right now.
Going into next week, we've got earnings coming out of Amplats as well as Kumba Iron Ore. What are you going to be paying attention to when they present those numbers?
So Amplats have had some serious operational issues that came through in the first quarter, and we'd be wanting to see whether or not there's been some relief on that front, if they've been able to turn that around. Perhaps we'll get a little bit more detail in an operational update that's due in the next few days. And then from a financials perspective, we want to see how their cash conservation strategies have played out. PGM prices are exceptionally low, and that will have a big impact on margins, profitability, and cash flows. So that's going to be the focus for Amplats. And then from a Kumba Iron Ore perspective, we would want to see whether or not they've been able to see an improvement on the Transnet freight rail situation. They have actually had to curtail volumes in order to ship less because they actually can't get their product to port. So they've been working with Transnet on that, and I think we would want to see how that is taking shape.
Well, Chantal, thank you so much for your time. That is Chantal Marks from FNB Wealth and Investment. And looking at U.S. futures right now, it seems as though stocks are lower, and this is on the back of the performance that we saw from the semiconductors. And right now, the shares in semiconductors are a little bit lower. This follows the record-setting sessions that we've seen coming out of the Dow Jones. And if we look at the performance of those semiconductors, they have been driving majority of the gains as investors have been excited about the AI rally. But we're also seeing a broadening out in some of the small caps, with a lot of that excitement moving into those particular stocks. However, we're going to take a quick break. When we come back, we'll have a look at more news for you, so stay tuned.